Foreign buyers heading to the shores of the Sunshine State.
The weak dollar making U.S. real estate, particularly in Florida and elsewhere, red hot. People are snapping it up, those Canucks. They've got the strong loony. Phil Keating has more from Miami. Hi, Phil.
Hi, Liz and David. Yes, it's been a negative real estate slump story for most Americans, but growingly it's been more good news for people overseas, particularly in Europe. Pretty much every day you see a negative story here in the U.S., whether it's the prices for home resales that are continuing to decline, or it's a builder or developer filing for bankruptcy, or if it's the foreclosure issue, which yesterday the U.S. Treasury Secretary dealt with, hoping to next year keep those AMRs from going up for 1.5 million Americans. But what's been bad for the American investor and real estate owner has been a big bargain hunt for those over in Europe. Florida, the Sunshine State, actually ranks #1 when it comes to international buyers interested in real estate. Lately, there are more coming from Europe, British, Russian, Italians, on top of the typical interest we get from Canadians and Latin Americans. And in the Miami area especially, much of the real estate is being bought by foreigners on the high end, properties starting in the millions. Key reasons for all of this: low interest rates, plenty of supply, plenty of sunshine, location, 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 and of course the weak greenback.
Now the dollar is down, the euro is up. That means a big discount for foreign buyers from Europe and most other countries as well.
W Hotels is building a 400-unit condotel in South Beach. Property valued at about $500 million. It's scheduled to be completed next December, but already it's 70% sold, much of that to foreign buyers, like Italy's Fernando Placide. He says right now he can get a whole lot more for his money in the U.S. than at home in Rome. And Miami Beach, South Beach, also has other attractions.
For investment, the one important thing is the weak dollar. That for you as a European is very, very good.
And in Greater Miami, there is a glut of supply, or rather an abundance of supply. Roughly 50 to 80,000 properties are available in Miami-Dade and Broward counties, and right now in just the Miami area, about 20,000 condominiums are either being planned to be built or are currently under construction. And typically in Miami, they only sell about 1,000 condos a year. So there's a supply, and in Europe, they are finding the attractions in Miami. And what Fernando told me, he says, #1, it's a big U.S. city. It's got a Caribbean flavor and tropical feel and tons of beautiful women. That's what he was talking about, David. That's why you should always come visit me.
Well, I was going to say all of which interest Phil Keating as well, and for good reasons. Phil, good to see you, man.
Hey, Phil, thanks. The weak dollar, so might not be so bad, right? If it means that foreign buyers are swooping in to help us pull out of the subprime mortgage mess.
Let's talk to our Fox panel and see if they really think that's what's going on. I saw you shaking your head. No, Peter, why?
Well, I mean, if foreigners come over here and build factories, fine, that helps the economy. But when they just scoop our assets out from underneath us, when they take our weak dollars and recycle them and buy up our assets, buy our real estate, buy our companies, this is our country being bought out from under us.
But doesn't that happen all the time? I remember when the petrodollars did it in the 70s. I remember when the Japanese did it in the 80s. It's a cycle that we go through, and then they sell it back to Americans.
Unfortunately, though, this cycle is going to be very pronounced this time. You know, this is the price we pay for years of living beyond our means. You know, we're selling off our best assets, and these deals are going to get a lot better for foreigners. The dollar's going a lot lower, real estate's going a lot lower. They're going to buy all the premium properties.
Go ahead, Gary.
Yeah.
Foreigners have been buying up our assets since the beginning of time.
No.
And that's what markets are all about. The dollar is weak, they come here. The dollar is strong, they stop. I know you have this whole thing that the end of the world is coming and we're the Titanic, but it's just not that bad. You know what I have to say to foreigners? Come to Florida, baby. I've got a house in East Orlando. Come pick it up. Great place.
We used to buy up foreign assets. We were the world's wealthiest creditor nation. It was Americans taking our strong dollars and buying assets all over Europe.
But, Pat, is that just waxing and waning in the way of the free market?
Absolutely. And when the dollar is strong, we do those kind of things. We go over and we are buying European assets, and they have the same trepidation when we come in and try and buy up their assets that we're having today when they're coming in to buy up our assets. You're absolutely right. It's the way that markets ebb and flow. And the weak dollar, this is one of the benefits of the weak dollar, is that we can attract these people here. It's not just the real estate market. It's also Canadians streaming across the border to buy all our goods.
But Victoria, you know, one fear that I do have about all this, part of what Peter's saying, is that it drives protectionist fever here in the United States. There's a lot of people see foreigners coming in and say, oh my God, it's an invasion, we have to keep them out. They put up all these tariff barriers.
You can't tell the difference between Americans and Canadians.
Those accents.
What's that big accents, yeah.
I think that is a real risk. I think there's a huge political risk that we all get a little bit scared and we throw up the gates of protection, and that would be really negative for our economy. But Pat was onto something that's crucial, which is it's not just real estate. Foreigners are buying our goods and services right now. And in the last quarter, it looks like the growth in that, foreigners coming and buying goods and services that Americans produce, made up for the shortfall on how construction starts. Right? Because that's been slowing. But meanwhile, because the dollar's weak, you see more foreigners coming into the U.S. and buying our goods and services. That's a crucial kind of balancing act that's going on right now, and it's why we want foreigners to be buying stuff in the U.S., housing and other.
Well, you know that the Canadians will really have a toehold when they demand a hockey team in Fort Lauderdale or something. I mean, how can that be a bad thing, Peter, if what would have been left as an empty house that was causing all kinds of problems is now picked up by a Canadian who comes to visit and spends their money here, and
but
you know, the service industry,
if the dollar hadn't collapsed, it would have been picked up by an American, and we would own that asset. It's not a good thing when our assets end up being owned by
Peter,
foreigners.
We've got a housing glut.
The dollar.
That's why.
The dollar has been going down, but go get a 10 to 15-year chart of the dollar index. It's just down half of what we made before that.
There are a lot of people. There are a lot of people living up here in New York that don't have condos in Florida that are cold this winter that would probably like to go down there, but now they can't because the Canadians are buying them instead.
I assure you, they can still go down and pick up a condo. Gary,
they can't afford it. Their money's too cheap.
Is there not a condo down there for an American to go buy?
You can't afford it.
I believe there are 0 barriers to entry for Irish, Canadian, Americans, Smirks. It does not matter to me.
How about no down payment and they can't afford the mortgage?
By the way, Gary, just quickly, because you are down there and you'll be a reporter as well, 2-bedroom with a view of the water. How much is that condo going for down there?
About $1.99.
Seriously, how much?
Well, let's just say that they're down about, from what I know, especially in Miami, 25–30%. But my opinion, in the next couple of years, it could be name your price because they can't get rid of the product, and they're building 20,000 more. These people are insane down there.